What if everything you've ever been told about gold and safe reserves is a lie? Not just some innocent misunderstanding, an actual strategy. Because while you're being told gold is a boomer asset, while your feed is full of tech stocks and meme coins, China is quietly running one of the most sophisticated financial war plans in modern history. And the real target isn't inflation or a recession. It's the US dollar itself. On paper, the United States still looks untouchable. World reserve currency, biggest military, Wall Street at the center of everything. But underneath that surface, a second system is being built. A system where paper gold keeps Americans and Europeans hypnotized, while physical gold moves east, ton by ton, year after year. Here is the twist. This isn't just about some central bank buying bars and throwing them in a vault. That's the textbook version. The real story is how China is using gold derivatives and the shadow banking system to trap the dollar in its own illusions. So when this game ends, the West is left holding paper promises, and China holds the metal that actually matters. We're going to break this down step by step, the history, the mechanics, and what it means for your savings, your job, and your future. Before we go deep, let me know in the comments, where are you watching from? I want to see how far this story travels. And if you're tired of the sanitized version of financial history, subscribe right now. This channel exists to dig into the unfiltered truth. To understand China's gold strategy, you don't start in Beijing. You start in Washington, 1971. Back then, the deal was simple. Under Bretton Woods, the US told the world, hold dollars. And if you ever doubt us, you can turn them in for gold at $35 an ounce. That promise made the dollar king. It wasn't just paper. It was a claim on something real. But by the late 1960s, the US was printing more dollars than it had gold. The Vietnam War, Great Society programs, foreign governments, especially France, started calling the bluff. They sent in dollars, asked for gold, and the US vaults started bleeding. So in August 1971, Nixon went on TV and quietly cut the link. No more gold for dollars. Just trust. Sound familiar? Today, instead of the US promising gold it can't deliver, banks and exchanges promise gold they don't really have. Paper contracts, futures, ETFs. Everyone's holding claims. Almost nobody's holding metal. After 1971, the US needed a new anchor for the dollar. That's where the petrodollar came in. A quiet deal with Saudi Arabia. You sell oil in dollars, we protect your regime. Suddenly, if you wanted energy, you needed dollars. That artificial demand for US paper held the system together for decades. Sound familiar? Because now, China is trying to do the same thing, but in reverse. While the US used oil to lock the world into the dollar, China is quietly using gold to unlock it. Fast forward to 2008, the system almost died. Officially, it was a housing crisis. But underneath, it was a derivatives explosion. Leverage on top of leverage, all built on the belief. Don't worry, the models say this is safe. When Lehman collapsed, nobody trusted anyone. Not because they suddenly hated each other, but because nobody knew who really held the risk. Sound familiar? That's the same feeling non-Western central banks have now. But this time, it isn't about mortgage bonds. It's about being sanctioned out of the dollar system overnight. Russia lived it in 2022. With one policy move, hundreds of billions in reserves were frozen. Decades of safe reserves evaporated with a decision made in Washington and Brussels. That sent one loud message to every non-Western power. Your dollar reserves aren't really reserves, they're permissions. And those permissions can be revoked. So if you're China, sitting on trillions in foreign reserves, watching Russia get shut out of the system, do you still want your national savings in US treasuries that can be frozen with a signature? Or do you quietly start shifting into something no one can print, and no one can freeze. That's where gold comes in. Officially, China reports a little over 2,000 tons of gold. Respectable, but nowhere near the US's official 8,133 tons. That's the part they tell you. But off the record, many analysts believe China's true combined holdings, when you add up the central bank, state banks, military reserves, plus what's effectively off the books, could be 10 to 20,000 tons. If that's even close to reality, it means China has spent the last 2 decades silently draining Western gold markets. The West still thinks it controls the game through paper pricing in New York and London. China is happy to let that illusion continue as long as it can keep converting those cheap paper prices into real metal. Sound familiar? It's the same pattern over and over. The West builds a paper promise system. It looks stable, liquid, sophisticated. Underneath, the real collateral is shrinking. In the 1960s, it was gold backing the dollar. In 2008, it was actual income backing toxic mortgage securities. Today, it's physical gold backing a mountain of derivatives. And once again, someone is quietly making sure that when the music stops, they're not the one holding the paper. Here's where the story flips from China buys gold into something darker. China isn't just stacking bars in a vault. It is weaponizing the global paper gold system the West built and turning it back on the dollar. The modern gold market is a hall of mirrors. Most of it isn't about people taking delivery of metal. It's about contracts, futures on COMEX, swaps between banks, unallocated gold accounts in London, ETFs that say, you own gold, but you'll never touch it. On some days, the volume of paper gold traded is more than 100 times the amount of physical gold actually available. For every 1 real ounce, there can be dozens, sometimes hundreds of claims. Now plug China into that. While Western funds trade in and out of paper gold for yield or speculation, China uses the dips in paper prices to quietly buy physical. It encourages its own citizens to buy gold. It builds its own exchanges in Shanghai, slowly shifting price discovery east. At the same time, Chinese-linked entities can play both sides of the game, participate in the paper markets offshore, accumulate real metal onshore. The result is that over time, the West becomes increasingly trapped in a paper gold universe claims on gold, not gold itself, while China concentrates the underlying reality. And here's the twist. If that's the strategy, China doesn't need to attack the dollar directly. All it has to do is let the dollar system over-leverage itself on fake gold. Then, at the right moment, force a reconciliation between paper and physical. It just has to pull back the curtain. Imagine this. A few major players in the gold market, instead of just rolling over their paper contracts as they always do, suddenly say, we want the physical metal. Now, the market freezes. The vaults are nearly empty. Prices don't just rise, they explode. Trust in the entire system evaporates in an instant. The illusion of infinite gold dies. And who is sitting on the largest undeclared hoard of physical gold? It's not the United States. There's a specific country at the center of this web, and its long game is quietly rewriting the rules of money. To understand how this is possible, you need to see how we've transformed gold. It used to be simple. Either you had it or you didn't. Now, it's a multi-layered pyramid of promises. At the very bottom, you have the real stuff, physical gold bars and coins. Above that, you have allocated accounts, where in theory, you own specific numbered bars in a vault. But then, it gets murky. Above that are unallocated accounts. You don't own a specific bar. You just have a claim on a pool of gold. It's like a bank account, where the bank only keeps a fraction of deposits on hand. Then come futures and options, which are pure paper bets on the price. And at the very top, we have ETFs and other complex financial products. Wall Street is magic wrappers that most investors never bother to look inside. Each step up this pyramid adds more leverage, more promises, and more paper claims on the same limited supply of physical gold. The London unallocated gold market, the heart of this system, trades trillions of dollars worth of paper gold, backed by only a tiny fraction of that in actual metal. If just 5 to 10% of those paper holders demanded real delivery at the same time, the system would completely seize up. It's what they call moral hazard. Everyone assumes that not everyone else will ask to be paid at once. Does that sound familiar? It should. It has the exact same logic that Wall Street used before 2008. These mortgage-backed securities are perfectly safe, because not everyone will default on their homes at the same time. We all know how that story ended. Now, let's think like Beijing. You've watched the financial crisis of 1971, 1997, 2008, and the currency debasement of 2022. You've seen what happens to countries and investors who put too much faith in Western paper assets. Would you want your nation's wealth stored inside a system that can print infinite money, freeze your assets on a political whim, and is built on a mountain of IOUs? Of course not. So, China is playing a brilliant double game. Publicly, they smile and participate in the global financial system. They buy US dollars and play by the rules. But privately, they are opting out of the core illusion. For years, they have been importing thousands of tons of gold, primarily through Hong Kong and Shanghai. And once that gold enters China's domestic system, it almost never leaves. Strict capital controls act as a one-way valve. The Chinese government actively encourages its citizens, banks, and corporations to buy physical gold and jewelry. The result is that a massive undeclared stockpile of gold isn't just in a central bank vault. It's distributed throughout the entire society. It's a national hedge against a global financial reset. Meanwhile, China's official gold reserve numbers creep up slowly. 10 tons here, 20 tons there. Just enough to be noticed, but not enough to cause a panic. Because if China suddenly announced, by the way, we actually have 20,000 tons of gold, the paper gold market would implode on the spot. The price would go vertical. Everyone would scramble for physical metal, and the West would be forced to admit it's been completely outplayed. China doesn't want that chaos. Not yet. And it gets even more sophisticated. China is using the world of shadow banking and complex financial engineering to its advantage. They use gold-related collateral to access Western dollar liquidity, and then use those very dollars to buy more physical assets, including more gold, draining it from the West. In plain English, they are turning our addiction to paper gold into a tool to siphon real gold out of our system. And central banks around the world have noticed that something is broken. Since 2010, they've shifted from being net sellers of gold to net buyers. Since 2022, that buying has surged to record levels, with over 1,000 tons purchased in some years. And a huge chunk of that demand is coming from non-Western nations. At the same time, the US dollar's share of global reserves has fallen from over 70% 2 decades ago to the mid-50s today. Gold's share is quietly climbing. You can see the stress in the market. Whenever physical supply gets tight, the price for an ounce of gold in Shanghai can spike $50, $60, even $100 above the price in London. That premium is the real-time measure of how badly the Chinese market wants the actual physical metal, not a paper promise. So here's the big reveal. By allowing the West to build an over-leveraged paper gold empire, and by patiently and systematically siphoning physical metal out of that empire, China is setting the stage for a future showdown. When a serious crisis of confidence in the US dollar or the Western financial system finally hits, there will be a panic-driven rush from paper assets to physical gold. When that happens, Western institutions will be unable to deliver. The world will see, in real time, that the emperor has no clothes, or in this case, no metal. In that moment, any country sitting on a massive pile of real gold, especially China, instantly gains enormous monetary power and influence in whatever new system emerges from the ashes. The permanent consequence is this: the dollar-based system is being locked into the role of a debt-fueled, paper-heavy fantasy world, constantly at risk of its own illusions collapsing. Meanwhile, China is standing outside that fantasy, holding the real collateral. We're living in a system that is more leveraged, more interconnected, and more digital than at any other time in history. The 2008 crisis moved at the speed of phone calls and emergency meetings. Today, a crisis moves at the speed of algorithms. If the gold derivative illusion cracks, whether from a geopolitical shock, a major default, or simply a tipping point of lost faith, it won't unwind slowly. It will happen in hours, not months. And in that moment, reality always wins. Physical beats paper. Trust will flow to whoever can credibly say, "We have the collateral. We can survive the reset." This is why China's gold strategy is so critical. It's not about a nostalgic love for a shiny rock. It's about quietly exiting a rigged game while encouraging your opponent to double down on the rigged rules. That way, when the game inevitably breaks, they're the ones who absorb the damage, not you. Every time we let financial institutions replace reality with derivatives, synthetic products, and innovation, we don't eliminate risk. We just hide it, repackage it, and make it systemic. So the real question isn't just, what is China doing with gold? It's, why did we build a financial system so fragile that a single country, simply by choosing reality over illusion, can fundamentally tilt the entire future of money? If you're skeptical of the official story and think we're being marched toward another engineered collapse disguised as an accident, hit that subscribe button. Share this video with someone who still thinks gold is just their grandpa's boring asset. And let me know in the comments, are we any wiser now? Or are we just walking the same disastrous path in better looking suits? Thanks for watching.